Hey guys, so today I want to talk about DraftKings stock. And a few weeks ago, when I first talked about this stock, it was one of the most hyped plays in the market, and a lot of people thought that it was destined to be one of the first gambling stocks to hit $100 here on the stock market. However, over the last few weeks, they've had a long period of consolidation that has a lot of people wondering whether or not they're going to be able to recover to those highs of around $40 to $45 and whether or not they should buy in or simply short the stock. Now, if we do look at some of their financials here, you can see that they have a market cap of 12 billion, and even though they've been down in the last few days to weeks, they have an average volume of 11 million. So this is already a lot more than some regular stocks that trade and a lot of blue chip stocks that a lot of people already know on the market. And what the volume means is that when there's high volume, there's most likely going to be a lot of volatility with a stock and a lot of people kind of moving that stock price in a very fluid way. And that's very good if you are a swing trader or potentially looking to make a short term trade here in the future. Now, another thing about DraftKings is that they do have earnings on August 14th. So this is about a month away, like almost exactly a month away. And what I want to see for the stock here, if they are going to be having positive earnings, is that they do come up back to this $40 level and kind of retest their highs one more time before they do have their earnings report here, which is kind of what normal stocks do when you are expecting earnings and when a stock is very new and a lot of people are hype around a stock joining the stock market. So one of the main things that I do use to kind of decide when the best time to get in a position is tradingview.com. Now tradingview.com is a site where you can access charts, and there's a free and paid version, and right now I'm on the free version, so anybody can use this, and it's honestly one of the best tools that I've ever discovered as a trader here. So one of the main things that I was watching for DraftKings when they were coming up was a period of consolidation. Now as a swing trader, any period of consolidation is potentially a period where you could be profiting. So one of the main periods that I was able to identify here was around the $43 to $45 range. Now you can see that the stock has had a lot of trouble breaking above this price and hasn't been able to over the last month to 2 months time frame here. Now, one of the main things you can see is that they are between two channels right now. They're between the $42 and 35, and if they do break above, then they are, or if they do break below, sorry, then they are within the 35 to 27 channel. Now, if you did get it at $27, you got very lucky here because there was no way of knowing when the stock was going to finish selling off. And to be honest, we could be seeing a repeat of the trend we saw up here where they do hit the high of a channel and then pull back immediately afterwards to the lows here. So you want to be very careful that DraftKings isn't just faking people out and isn't just simply going to pull back to the $28, but instead is going to recover all the way back to the top. Now, you can see here that they're almost exactly copying this pattern where they went right above the channel for about a dollar or two, and that's exactly what DraftKings did. They came up exactly $2 above the $35 mark where we have the channel registered here. However, they immediately pulled back in the same exact way. And what I'm kind of watching for Monday is whether or not they open very red and very bullish here. And if they do open very bullish, then I am not going to buy in on this stock. I'm going to wait for them to hit again on the 31 or on the potentially 28. And if they do hit the 28, then I'm going to buy multiple shares of this company and a lot of shares, in fact, because I think that this is a minimum price for the company here in the short and long run. Now, if they do pull back on Monday, I'll probably be very surprised because of the fact that they had a long period of downwards momentum, and they had so much downwards momentum that they even broke into a seemingly new channel here. However, I think that they can potentially recover and come back up to this $45 range, not only because of the volume and the short amount of shares on the stock, but I also think that they have a lot of potential upside with the fact that they've been opening a lot of new casinos online in a lot of new states. Now, other states have had strict rules against online casinos and online gambling over the last few years. However, in the last year alone, we've seen over 5 or 6 states allow DraftKings to operate in their jurisdiction. So this just shows that there's a lot of upside potential to DraftKings as a stock. And as you may know, usually the stock market moves and prices in moves way before the actual move happens. So if people think that DraftKings is going to be worth $100 within 5 months, then they'll make it worth $100 now. They're not going to wait. Why would you wait to buy in on a stock that you think is going to be worth more when you could simply buy it now. Now, I have a small position around the $35 mark already from before that I was holding to around the 42. That's why I said I was waiting for a period of resistance here, or a quick consolidation period. That way I could kind of know whether or not my investment was worth it to hold. And when they did come back to this 35 range, I still hold on to it, and it went up to 43 again. However, I did not sell out. I thought that they were going to have enough momentum to break out of this channel. However, they did not, and they pulled back even below. Now I'm at break even again. But listen, guys, I'm watching this stock very, very closely, because if they do come back to this $28 range, there will not be a better time to buy the stock. They literally cannot be worth less than $28, just based on the fact that they do own all these casinos in all these jurisdictions and are making billions of dollars in revenue, which if you compare to other stocks that are also making this amount, they're just not as hype, and they simply aren't worth as much. And DraftKings should be worth more at around $12 billion market cap. So yeah, guys, just keep a close eye on DraftKings stock here. Depending on what they do on Monday, and especially the next week, we've seen the SPY very, very green here in the last week. However, they're now reaching the maximum price, what they were worth like 2 or 3 weeks ago, when we did see that huge run up on the stock market, and when we did hit bull territory again. So if we are able to continue on that upwards momentum, then I would say no doubt that DraftKings and other stocks alike are going to be able to come up to new highs here in the recent future. However, if we do see that the stock market pulls back as a whole and the SPY goes red for another week, as they kind of continue into that channel that they've been in over the last 2 or 3 weeks here, then I think that DraftKings might have a small pullback to around the $31 range. However, I see it very unlikely for them to be retesting the $28, as that was kind of a breakout of their usual channel, and I honestly don't see them coming down here and creating a new channel around the 27 to 31 range, as that's just a too sold off price for DraftKings. Now, you can see that this is one of the only times where they've actually hit below on the RSI, is when they're at the $31 range. And when they do hit the $31 range here, that's why I think it's going to be such a good time to buy, because of the fact that the RSI is indicating to a lot of traders that it might be a good time and have a lot of potential to come in on this trade here. Now, you can see that the only other time was when they hit 21, and what that kind of shows you is that they have a lot more upside than downside here. You can see that the scale, the RSI, is much quicker to register a downside than an upside here. Whenever they do come to the upside, even if it's a large move like you see here, it doesn't really come out of the RSI, whereas when they come downwards, it is a big move. So what that means is that a lot of traders are seeing this and kind of thinking, okay, maybe it's a good time to buy in, maybe it's a good time to buy in. So even if you are in a negative position here, you can see that there are a lot of pullback opportunities with this stock to potentially profit in the short run here, especially if you are a day trader, where you can simply buy in a single day and the next day sell out for double your money here. So just kind of be careful, guys, here on this stock. It's a lot of volatility and a lot of liquidity with the amount of shares moving on a daily basis and with the volume that we're seeing with it. However, there's a lot of potential for a good trade if we see a lot of these levels retest. Now, if we see the 31 retest, then I would expect DraftKings to kind of do something like this, where they come down around to the 31 and then come up all the way back to the 42. Or if we do see the 28 retest, then I would expect something more like this, maybe, where they come up to the top of this range, break down to the 31 one more time, and then right after come up out of this channel and back to the 42. So it's all kind of dependent on their earnings, because this is about a month's time when I'm assuming. You see that they have already marked out their earnings for around August. So it's just a good time to kind of expect them to be hitting new highs. As you may know, a lot of stocks run up to their earnings, and especially with DraftKings being such a hype stock and a play with so much potential upside into the future, I feel that a lot of people are going to be watching this come Monday, and come when they hit one of these key levels here, if they are able to break out, then a lot of people will be watching this $40 level here to retest. However, this is not a very key level. I would think more that the $42 is the strongest level right now that we are waiting to see retest before we can kind of decide if they're going to be breaking out to new highs or potentially coming back to this mid-range or potentially to the lows that we saw around a week or two ago. So yeah, guys, just keep a close eye on this stock. It has a lot of potential upside for a trade, also a lot of potential downside for a short if you are willing to short a market that is potentially very bull heavy as the stock market of the US is here. So yeah, guys, just keep a close eye out on this stock. As always, don't forget to like and subscribe the video, and thanks for watching.